That's advice I can give the entire audience. Choosing your bankers is the most important part of it. Having a great business is great, but having that advice, having that backing, having that support, you need that.
Joe Fooks here, joining us in the closing call. He and his co-founders bootstrapped Mortgage Automator to 400 customers, offering an end-to-end platform for private lenders with loan origination, loan underwriting, and loan servicing. Love to hear about how you came up with the idea and the origin story.
From personal life experience, we knew the nuances of what lenders were looking for. There's a need for it in the market. And so we embarked on that journey. One of the catalysts that sort of got us off the ground is they felt that we actually understood what they wanted. They understood that we were going to get them there. Now, obviously, they're very happy clients.
Fast forward to 2022 when we started working together. Why did you decide to partner with Kaizen?
There was just a lot of interest in what we were doing. People were flying in to see us. This was all very new to us. We had a friend who was an advisor, and he said, "You are crazy if you think that you're going to try to sell this business without using a banker." Looking back, I'm so thankful. Any new business I would ever start, I wouldn't even think of trying to sell it on my own. You took an approach to understand what we were doing as a business. You actually even gave us advice on where we should focus our growth. We really felt like you guys had our best interest. We never felt like you were working for anybody else. It's a very tough emotional time. This is your baby. It's pretty much the largest financial decision of your life. And you can't make a bad mistake. It could cost you a lot.
You're listening to The Closing Call, the podcast where we dive into the journeys of founders as they navigate the highs, lows, and pivotal decisions that led to the defining moment that we call the closing call.
Today we have Joe Fooks here joining us in the closing call. He and his co-founders bootstrapped Mortgage Automator up to 400 customers, offering an end-to-end platform for private lenders with loan origination, loan underwriting, and loan servicing. It's great to have you here, Joe.
Shane, thank you so much for having me, of course. Super excited to be here and appreciate you hosting me here in Scottsdale.
Yeah, fantastic. Well, tell us a little bit about the journey to building Mortgage Automator. You yourself were a private lender. You faced a few challenges. Love to hear about how you came up with the idea and the origin story.
Yeah, so you go back 10 years now. It's been a while, and we essentially we were running a business. I was running a business, and there's just so many inefficiencies. There were softwares out there, but they strictly focused on just the servicing aspect. They're quite antiquated. At the time, I sort of embarked on this journey, asked my good buddy Pavel, one of the co-founders, I said to him, look, I've got these issues, got these things that I need dealt with to create some automation within my own business. I had no intention to originally commercialize the product. And I said, if you can just take this piece of paper, this digital application, drag and drop it into an app, that I can then enter a few fields, key fields, and let it generate a term sheet. This would make my life a lot easier. And lo and behold, a few weeks later, he shows me a working version. We start using it. Word gets around town. I was exhibiting at a few shows. A few people had seen what I was working on, and they said, would you consider selling this? And Pavel had, at the time, he was going through his own changes at his business, and I said, are you interested in building this with me? I think we can commercialize and sell the product. There's a need for it in the market. And so we embarked on that journey. We built it, and here we are today, obviously. It's a different animal than when we started, but we worked our butts off over the years to build it and address things in the market that were just not dealt with. From personal life experience, we knew the nuances of what lenders were looking for. And of course, as you can see today, clearly lenders like what we were building.
Absolutely. And at Kaizen, we love partnering with founders who build product out of their own pain points, their own needs. And it was very clear early days in terms of the traction that you exhibited with your early customer base. You were clearly a thought partner and somebody who folks leaned on in the private lending industry. I'd love to hear a little bit more about, as you guys started getting going and having private lenders adopt your platform, what challenges did you face, and where did you feel like you really hit an inflection point?
This is sort of an interesting thing. So we were building it, and I said to Pavel, look, we just need a doc gen solution. We won't need anything else. admit to him now, like I totally bamboozled him and told him that it's not going to be as complicated as we need it to be, only to find out as I was making the sales, clients need this, they actually need servicing, they need fund management. And so we would bring on a few customers and those customers say, well, this is great, but we need more. And so Pavel would just go back to the drawing board and keep building more. And then we would start to run into an issue where, what we didn't realize about private lenders, I thought I was running the most efficient private lending business out there, only to find out that every private lender does something different. Everything is handled differently. They do funds. Like today, the system calculates interest 7 different ways. So many different permutations that we had to build to accommodate the client's demands of today. And obviously, that's always constantly growing. And so as we kept running into these challenges, we just kept taking them down one by one and building rapport with these clients. And again, because I had industry experience, I had people who knew me, they took a chance on us. That was one of the catalysts that sort of got us off the ground, is like they felt that we actually understood what they wanted. They understood that like we were going to get them there. They believed in us. They were patient with us. And now obviously they're very happy clients. I would say where we ran into a problem was also COVID. So we were building the system out right during COVID. And we had contracts out with clients who were going to move forward with us, and then COVID hits and everyone starts canceling or not following through with their contracts. But then like about 30 days later, and this was like literally the game changer for Automator. While I hated COVID, it actually put us on the map. A lot of our competitors were on-prem, and our system was always built as a web-based product. And so people are like, I can't get onto my system from my office. I can't go to the office. And all of a sudden, the phone just wouldn't stop ringing. And we really pushed the whole idea of like, you can do this on the beach, you can do this on vacation, you can work from home. We perfectly accommodated the COVID issue, and we just noticed our sales just went through the roof. And with that momentum, we just kind of really pushed. We doubled down, tripled down, and that was sort of the inflection point of where like Automator really got its wings.
Yeah, we saw within the data, the customer acquisitions were skyrocketing after that.
Yeah.
We continued to scale the business, which was fantastic. But then we also slice and dice that data together when we looked at MRR size, as well as folks that have been on the platform for a number of months, 6 months, 12 months, 18 months. And we could clearly see within the retention data that even though customer acquisition was skyrocketing, there was a clear ideal customer profile fit. So maybe you can tell us a little bit about like, what did you determine was like your ideal customer as you continue to scale the business?
We have customers from all shapes and sizes, guys that were managing, $2 million to we have clients that are managing $1 billion plus in AUM. We're obviously always looking to bring on enterprise customers. We're essentially a foundational piece of their business. We allow them to scale and grow, but we've also saw that even with smaller clients, if we give them the right tools, they're able to actually scale and grow their companies as well. So our ideal customer was typically someone around 20 plus million to 150 million of AUM. That's typically who our customer is today. But as the system evolves, more and more enterprise clients hear about us, so we start adding those and we start focusing sort of more towards that direction. But we've never forgot about the little guys either, and they're the ones who actually put us on the map originally. So it's hard to say our ideal customer was like this specific type of client, but the typical range where we saw a lot of success and saw their success was in that 20 to 150 million range.
Makes perfect sense. Then you fast forward to 2022 when we started working together. What was that moment in time where you said, you know what, we got to pick our heads up, maybe out of the day-to-day business and start to look at things through the lens of maybe valuation and what the next phase of the business looks like? What was really coming to mind, and ultimately why did you decide to partner with Kaizen?
So, we were getting a lot of phone calls. I remember Pavel had mentioned to me that he had, like, by the time we had sold the business with you guys, the Rolodex was over 100 interviews, phone calls, and like repeat calls. And there was just a lot of interest in what we were doing. People were flying in to see us. This was all very new to us, kind of like in a movie. You don't really know what to expect until you're actually there dealing with it. And the conversation just started coming, realizing like, this is something that we're gonna end up one day selling in some way or another. Obviously, we're still holding shares in the company today as a minority investment, but we really saw the excitement that these companies, these private equity firms were showing towards our business. Like clearly we had hit this interesting niche market and there was a lot of growth, and they loved and saw what we were doing. They saw the passion in what we were doing. And so the conversations just became much more real. And obviously we had a friend who was an advisor, and he said, "You are crazy if you think that you're going to try to sell this business without using a banker." And I would say, looking back, I'm so thankful. Not only do we use bankers, but obviously you guys. We have no regrets. Any new business I would ever start, I wouldn't even think of trying to sell it on my own. There's a reason why realtors sell people's properties and people don't try to do it on their own. Real estate people understand the market. They have buyers. It's the same thing with you guys. You guys took such a intimate approach in understanding who we were as people. You took an approach to understand what we were doing as a business. You actually even gave us advice on where we should focus our growth and how we should look at it and what markers we should actually be improving upon when potentially going to market. You essentially staged our business. You bundle it up, put a beautiful bow tie on it, and educated us on how we should behave and approach these potential private equity firms, because it's a very tough emotional time. This is your baby. It's pretty much the largest financial decision of your life. People say like you buy your house, it's the largest. No, selling your business is the largest decision of your life, and you can't make a bad mistake. It could cost you a lot. And so being as prepped and ready with your team as we could be, I think the outcome was phenomenal. We're obviously very happy with the final outcome. And it was also a long process. Like when we engaged you, or when you engaged us and we talked to a few other firms, like it was clear that you guys were the ones we wanted to move forward with. Like it was not even close in just basic presentation, understanding our business, understanding how to put everything together, understanding the numbers. We really felt like you guys had our best interest. We never felt like you were working for anybody else. It was all about us. And so we also felt protected. We felt that like you were making sure that, certain things were not being exploited, where private equity potentially can do that to a vulnerable seller, because it is an emotional decision. And so we were able to take a lot of the emotion out and just strictly work on the facts and getting the best possible outcome for our company. And for that, we're obviously forever grateful.
We are grateful too about, our partnership, and it was a phenomenal outcome. I know we had set some pretty aggressive tiers out of the gate, and we worked towards that over some time.
Yes.
And so maybe you can talk to me about, what did we do during the time we had in our partnership before we went to market? Even though the market looked at the business over, let's say, a 3-month period, we had an engagement for 2 years in advance. So maybe you can talk a little bit about that.
I was actually going to touch on that. So, the timing was really interesting because when we were speaking, multiples were insane. We weren't there with our business from a revenue generation perspective yet. Like our numbers were not as high as we had hoped they would be when we were going to essentially go to market. And you even said to us, say like, look, we can go to market today and you'll get a very good outcome. But if you follow these specific steps and you gave us that guidance, like you said to us, the outcome could be significantly better. And even when we were ready to go to market and we were prepped, then the whole Silicon Valley Bank issue came up. The interest rates skyrocketed. Then people started doing down rounds. And we were contemplating, should we sell? Like, could the business be fully devalued at this point? Luckily, we were bootstrapped, so like we weren't worried. And we had positive cash flow again, which all these reassurances you guys gave us that we're in still very good shape. You also advised us to pivot in the sense of, look, like even if you're burning a little bit, that's okay. But like, let's get to break even. Let's get to some positive EBITDA, because the companies are not looking for crazy growth anymore. They want stable, consistent companies. Like the market changed overnight. And so that was thanks to your advice. We started to pivot our business based on that. And you sort of warned us that if we don't go to market literally this minute, this could be a 1.5 year, 2 year waiting period. But we had check-ins with you guys on a regular basis. I'd say on a monthly or quarterly basis. We were talking with your team. You guys were reviewing our numbers to make sure we were growing appropriately. We were making sure like net revenue retention was there, logo retention was there. All the things that we need to make sure we hit to continue showing strong growth and doing and adapting to the new world. We followed that advice to a T, and obviously we got the outcome based on your advice. And again, we didn't feel pressure. I would say, I think I've spoken to other founders where they felt their bankers were pressuring them to go to market sooner so they could get their outcome. And with you guys, 2-year waiting period is a very long time to actually sell a company, you know? And we very much appreciate that you were transparent and told us, look, guys, now is really a bad time. While we said that we can get these numbers, the market's completely changed. We need to wait. You guys were very mature about how you handled the situation by saying, the market's not good. We're seeing down round after down round. Guys who've raised money are in big trouble right now. You need to hold off, change trajectories. Let's go long-term here. We quickly revamped everything internally and started focusing on that advice. And of course, lo and behold, when the market improved, you're like, look, we're starting to see some really interesting outcomes now. The market's coming back. I think we can get you guys, what are your expectations? What are you hoping to get now that your revenue's at X? And we said, well, we're thinking if we can get to these numbers, we'd be pretty happy with an outcome. And so you knew what our baseline was, and you said, we're very confident we can get there. And of course, you absolutely crushed that projection, not even close, we were saying. And so again, we're super thankful that we waited, we listened, but that's advice I can give sort of the entire audience is choosing your bankers is the most important part of it. Having a great business is great, but having that advice, having that backing, having that support, you need that. If you think you're going to sell your house on your own, you're not going to get the same outcome. And so I suggest to every founder that's ever going to consider selling their business, get the right bankers. And again, we made the right decision, obviously going with Kaizen. So again, super thankful for that.
And Joe, you're being very humble. In our process, we saw the volume of term sheets in the high teens, tons of competitive tension. And, part of the journey was how do we identify who the right partner in the transaction is?
Right.
And so I'd love to hear a little bit about, is that what you expected, to have all these term sheets, all this interest, and then, internally, how are you identifying who do I want to meet with? Who do I want flying out to Toronto to see us in person?
I thought if we get a few people interested, like I would have been happy. Again, we didn't know much until you started to explain to us what that process was going to look like. We followed that process to a T. It happened to a T. We went to market at the right time, because we wanted to all do it before Christmas. We were like, we want to close this before Christmas and go away for the holidays with a paycheck. You advised and said, look, you should go rest, take some time, be with your family, like decompress. Let's go in the new year because that's a really good time. And we prepped for that. We took your advice, even though it obviously delayed the closing till April. We felt that was still the right decision. So again, taking your advice on what we should do. When the IOIs came in, we were sitting there shocked that there were 30 companies, 25 companies providing numbers that we didn't think were realistic as an IOI, and that was before the game started, right? So we were beyond impressed the outreach that you were able to get and the responses and how serious these people were, and then working with your team on vetting these potential buyers and giving us the information of like where they specialize and how they do well here, and this might not be the right buyer for you because of so-and-so. These guys have a great, reputation for this. And so we were able to kind of weed down, because it does take a lot out of you. These meetings they're brutal. They're 4 to 6 hour meetings, and it's day after day and Zoom after Zoom and in-person after in-person. And it does take a toll on you. And you guys prepped us for that as well. And so what I would say is being able to sort of filter out and bring in like the top potential buyers to the table was, again, something we would never be able to do. We didn't even hear about half these guys. We didn't even know who they were. And here they are offering these obviously extremely attractive numbers to us because they're so interested in our business. And I think you guys did a phenomenal job, packaging it up and showing them the potential of what our business did and the TAM, and being able to see the competitive advantage of how much they really wanted to buy us, and working with them to obviously providing that very attractive offer. Being able to not speak to 30 people was actually like we said to you, we don't want to talk to 30 potential buyers.
Sure.
It was like even talking to 10 was a lot. But at least we narrowed it down to really solid potentials. And I would say we were very, again, happy with the outcome. You brought the right partner to the table, and that was sort of all she wrote.
Fantastic. And for founders listening to this podcast, for someone who's been through the process before of selecting an investment banker across all these other investment bankers that are courting you and trying to set up your business, as well as deciding to even go with an investment banker because you have hundreds of private equity firms in your inbox, what advice would you give to them as they're going through this decision tree of, do I run a formal process, do I not? And then if I do run a formal process, how do I select the right banker for me?
Look, businesses were meant to be built and sold, and founders are very emotional when it comes to selling their businesses because it's like their baby. And what I can advise the founders just as a whole is, again, selecting the right banker will really make your life significantly easier. I would say like when it comes to selecting a banker, it's imperative you go through a proper vetting process. You need to make sure the people that you go with have your best interest. And it's a personality thing. We interviewed 4 or 5 different bankers. They were all good in their own ways. We just felt that going with you guys made sense for us. We felt a deep connection with you. We saw how much you and Zach, and not just 2 of you, but your entire team cared about our business. We saw it from every employee at the company. It's clearly a cultural thing at Kaizen where you instill these values to every employee that works for you. So we didn't see that from everyone else. We also felt that we loved that the owners were very involved in our transaction. We didn't feel that some of the other bankers sort of cared as much and they would put their just basic people on it. Whereas we always felt like, and to be honest, now that I've gone through this, I remember when we were in the thick of it and I'm calling you at midnight, I don't think it rang more than twice, and you or Zach were picking up that phone and we were dealing with strategy and dealing with all these things. So like whoever you end up choosing, and I'm saying this to all the founders out there, make sure that person has your back or that company has your back. And again, we were very happy that you guys had our back.
Absolutely, Joe. The journey was great from the very beginning of partnering with one another, being able to dissect the business and prepare for the outcome that we were looking for, and even being able to host you today on the closing call where you can share about your experiences with other founders that might be listening in, as well as the relationship we've built post-closing. It's been a great journey the entire time, and we appreciate you for everything you've done.
I'm appreciative of everything like we've built along the way. And again, this is something I'll never forget, and I'm always appreciative of what you guys did for us and forever grateful and thankful for it. So thank you, and thank you for having me and hosting me here in Scottsdale.